Stop scrolling right now, because what you are about to hear is either the beginning of the biggest financial shift of our lifetime, or the moment you realize the old stock market, as we know it, is already being quietly replaced. And yes, this involves XRP and NASDAQ, in a way most people are completely missing. Welcome back to the XRP Insider Network, where we break down the signals institutions don't want retail connecting. Make sure you like the video, subscribe, and turn on notifications, because this story is moving fast, and the people paying attention early are the ones who always benefit the most. Now let's get into it. Because the phrase XRP plus NASDAQ sounds outrageous on the surface, but once you understand what's actually happening behind the scenes with tokenized assets, real-world asset infrastructure, and settlement layers, the picture becomes disturbingly clear. Over the last few years, NASDAQ has openly discussed moving beyond traditional trading hours, beyond T+2 settlement, and beyond siloed legacy infrastructure. They have publicly confirmed partnerships and pilot programs exploring blockchain-based settlement, digital asset custody, and tokenized securities rails. And while they don't shout out XRP by name in flashy headlines, the architecture they are describing fits almost perfectly with what XRP and the XRPL were designed to do: ultra-fast finality, massive throughput, liquidity bridging, and regulatory compatibility. And here's where things start to click. Tokenization of stocks is not a theory anymore. BlackRock, Franklin Templeton, Fidelity, and major banks are already tokenizing treasuries, funds, and private equity. The only missing piece is a globally interoperable settlement and liquidity layer that can move value instantly between tokenized assets, fiat currencies, and cross-border markets. And that is exactly the problem Ripple has spent over a decade solving. Speculation disclaimer here, because this is not financial advice, and we are clearly analyzing trends and signals, not promising outcomes. But when you line up the timing, the technology, and the regulatory trajectory, it becomes very hard to ignore. NASDAQ's own leadership has stated that blockchain will eventually underpin the next generation of market infrastructure, not just for crypto, but for equities, derivatives, and settlement. Tokenized stocks mean shares represented as digital tokens that can trade 24/7, settle instantly, and integrate directly with programmable financial systems. Now think about the nightmare of liquidity fragmentation that creates if there is no neutral bridge asset connecting all of it. Every stock token, every currency token, every market needs instant exchange without friction. And this is where XRP quietly becomes the obvious candidate, not because of hype, but because it already operates as a neutral bridge asset designed specifically for institutional scale value transfer. While Ethereum struggles with congestion and fees, and Bitcoin cannot support complex settlement logic, XRP was engineered for speed, cost efficiency, and scale. And institutions care about one thing above all else: certainty, finality, and compliance. Not memes, not maximalism, certainty. And this is where the NASDAQ angle becomes explosive. NASDAQ isn't looking to launch a meme coin exchange. They're looking to modernize capital markets without breaking them, which means interoperating with banks, regulators, clearinghouses, and global liquidity providers. Ripple already works with central banks, payment providers, and regulated financial entities across dozens of countries. That network effect matters, and if tokenized stocks become real at scale, someone has to move the value between a tokenized Apple share, a tokenized dollar, a tokenized bond, and a foreign currency in seconds, not days. And that settlement layer has to be neutral, liquid, and globally accessible. Pause for a moment and think about the psychological shift here. If stocks trade like crypto, but with full regulatory backing, the entire market structure changes. No more limited hours, no more delayed settlement, no more trapped liquidity. Capital becomes fluid, programmable, and instant. And XRP sits right at the center of that vision. not as a speculative casino chip, but as infrastructure, the most important kind of asset, because infrastructure doesn't need hype, it just needs adoption, and adoption often happens quietly until it's too late to position early. Remember how few people noticed when the internet moved from dial-up to broadband, or when payments moved from cash to cards. This feels exactly like that moment, boring on the surface, revolutionary underneath. And the most interesting part is that regulatory clarity in the US, while slow, is finally aligning with this outcome. Tokenized securities require clarity, custody rules, settlement rules, and compliance frameworks, and Ripple has spent years fighting in court to force that clarity into existence. Whether you love or hate that battle, it may end up being the very reason XRP is even eligible to participate in institutional markets like tokenized equities in the first place. This is why the NASDAQ connection matters, not because there's a press release saying XRP partners with NASDAQ, but because the direction of capital markets is converging with the exact problem XRP was built to solve, and once you see that, you can't unsee it. The stock market is not being destroyed, it's being rebuilt on new rails, and those rails are digital, tokenized, and interoperable. And the question is not if this happens, but who powers the plumbing when it does. And that brings us to the signals that suggest this transition may already be closer than most people think. Now here's where things move from theory into something much more tangible, because when you look at the pilots, patents, and infrastructure investments being made right now, you start seeing a pattern that points toward a tokenized stock market going live in phases, not all at once. And in those early phases, liquidity and settlement efficiency will matter more than public branding. NASDAQ has already rolled out blockchain-based solutions for private markets, custody, and settlement testing, and these are always the testing grounds before public markets follow. Historically, every major financial upgrade starts in the shadows, then moves to the spotlight once it's stable, and XRP's role in this scenario is not about retail trading. Tesla shares on-chain tomorrow morning. It's about being the invisible connective tissue between markets, currencies, and asset classes. Imagine a future where a tokenized NASDAQ stock can be swapped instantly for a tokenized bond, settled into a tokenized dollar, and moved across borders without correspondent banking delays. That entire flow requires a liquidity bridge that does not favor one jurisdiction or currency over another. And again, that is XRP's core value proposition. This does not mean NASDAQ uses XRP in a simplistic way. It means financial institutions integrated into these systems may leverage XRP-based liquidity corridors behind the scenes. Just like Swift messages today don't tell you which correspondent banks are involved. The user doesn't see the plumbing, but the plumbing determines speed, cost, and scale. Another massive clue is the global push toward 24/7 markets. Tokenized assets don't sleep, and once investors experience always-on liquidity, there is no going back. The New York Stock Exchange and NASDAQ both understand this, but legacy systems physically cannot support it without digital rails. Tokenization solves that, and settlement tokens solve the liquidity problem. Tokenization creates. This is why the narrative around XRP has always been misunderstood by retail. People look for price pumps while institutions look for utility under regulatory guardrails. And the moment tokenized stocks move beyond pilots into production, the demand for reliable settlement assets increases exponentially, not linearly, because every new tokenized asset adds complexity to the system, complexity that requires efficient bridges. Now let's address the skepticism, because it's healthy. Some will say Ethereum, some will say private blockchains, some will say CBDCs will do it all. And the reality is it won't be one chain to rule them all. It will be an interoperable network of networks. And interoperability is where XRP has consistently positioned itself, not competing with every chain, but connecting them. CBDCs won't replace bridges, they will need them. Private blockchains won't eliminate liquidity fragmentation, they will create more of it. And this is why the neutral bridge asset concept keeps resurfacing in institutional white papers. And again, none of this guarantees outcomes. Markets are messy, politics interfere, and timelines slip, but the direction is unmistakable. Tokenization is not optional anymore, it's inevitable, and once stocks become tokens, the settlement layer becomes the real battleground, not the front-end trading app. This is the layer most people ignore because it's not flashy, but it's where trillions move. If you're finding value in this breakdown, make sure you like the video and comment, because it tells the algorithm this kind of deep analysis matters and helps more people see the bigger picture. Now zoom out one last time and ask yourself this. If NASDAQ and global markets transition toward tokenized securities over the next decade, and if liquidity, speed, and regulatory compatibility are non-negotiable, does it really make sense that the system would rely on slow, expensive, fragmented rails? Or does it make more sense that a purpose-built digital bridge asset quietly powers the flow behind the scenes? XRP doesn't need a headline partnership announcement to matter. It needs adoption where it counts. And history shows that by the time the headlines arrive, the positioning phase is already over. This feels like one of those moments where the infrastructure is being laid, while the crowd argues about price and whether this plays out in 2 years or 10. The direction of travel is clear. The stock market is being tokenized, settlement is being reinvented, and the assets that survive are the ones that solve real problems at scale, not the loudest ones on social media. Stay alert, stay curious, and stay ahead of the narrative. Because when the world finally realizes what rails the new market is running on, the opportunity window may already be closing.